What's up, guys? DayTrading Knockouts here. This is my second consultation call with Trade Brigade. This is episode 2, part 6, bang, bang, of the new series that I've been making, guys. And today, Trade Brigade is showing me his criteria of what to look at in a trade on any given day and during his analysis in rank order of importance from most important to least important. And what he and everyday traders need to be able to look at what he or she needs to filter out as useless and filter in as useful, and be able to analyze from the close of day analysis, pre-market analysis, and during the day on how to enter a trade, manage a trade, and exit a trade. You need to have a rank order and understand what truly matters to look at and focus in and hone in on those things to be able to better up your trading game. Now, there's a lot of factors and variables that go into day trading, but it's going to be a process where you learn to filter out what works and what does not work for you. I have learned through my 2 years of trading experience what really does work for me and what doesn't work for me. So you guys have to be able to do that for yourself and go through the process of failures, ups and downs, successes, the whole 9 yards. So, and again, don't take this advice just because I'm saying it. Again, Trade Brigade is the one that's giving me these mental qualities. He's the one that's been teaching me. He has extensive trading career of over 12 years at least. So, with that being said, let's get into the video. Don't forget to like and subscribe to DayTrading Knockouts. Stay safe, stay green. Peace out to my millionaire fellow day traders. Bye.
Say just because you mentioned expected move on the S&Ps, right? This oops, why is the drawing not loading? There we go. One thing about the whenever I say oh, we're at the upper edge of the weekly expected move, keep that in mind. It's noteworthy, but things have an order of importance, right? You've got number one, price action itself is always going to be number one. Price action, you can't. There's no arguing with what's going on with price. Those numbers are going through, hitting the tape, and we're trading there, so you can't argue with that. Then I would say something like number two would be internals, right? That's always going to be more important. Then number three, I would say something like levels. Where are we trading? And let's be very clear that the expected move is not it's not a level. I mean, yes, it's a horizontal level that we draw on the chart, but it doesn't come from structure. It comes from an options calculation, right? In an anticipated volatility move. So levels, that does not include expected move. And then, number four would be something like volume from a market profile perspective. This should be like VP, volume profile. Where are we in relationship to high volume nodes, point of controls, all that good stuff. And then you've got things like, okay, category number 5 might be expected move, EM. This is just, we have to remember that at the end of the day, it's still just a suggestion of what the options market is expecting. When it coincides with structural levels, it definitely is a bit more important, obviously. But it's not an end all be all. Right, it's not going to stop the market dead in its tracks and put it in the downward direction. Sometimes it does, and that's interesting when it happens. But in terms of importance and rank ordering where we should focus, if price action, internals, and levels are all telling us to be bullish, but the expected move down here is telling us to be cautious, it's not telling us to be bearish here. It's just telling us to be cautious about continuing in the upward direction. It's saying, hey, we've kind of hit what's expected, for lack of a better term, from the market. It might be more difficult to move higher. It doesn't mean go bearish. It doesn't mean the market needs to go to hell in a handbasket from here, but it does mean be cautious. But again, look at where it is in the list compared to these things. This should inspire confidence, and this should say, okay, we'll concede that it's not the best location on the chart, but cannot argue with specifically number one here. If the price action is saying we're in a bull flag and we're breaking that flag, then great. That is the truth. Right? This cannot lie. The internals, right? When that adds on top, you're building another layer, right? So that's how I would think about that, and just rank ordering things that are more important, things that are less important, right? Things that would also fall down in this category, for example, would be like, I don't know, Oh, let's see, like what's the RSI reading or some like indicator or something like that? What's an indicator telling me where are we in relationship to maybe like the Bollinger Bands? What else could you put down here? What's the dollar doing? Right? What is gold maybe? What's this stuff doing? Like, I think this is where we get to the core of actually your question, which is like, how much is too much to be watching? Well, if we know that all of this stuff falls into like a category bucket number 5 at the bottom of the list, you probably don't need to be watching the dollar. You probably don't need to be watching gold or Bollinger Bands or what the RSI reading is. If we have all of this, which is much more important for what the market's actually doing in front of us. So, that's why I like naked charts. That's why this stuff is what we analyze, probably at the close of the day to see what the context of the environment is or before the open. But intraday, it's too much to watch all at once, right? So that's why we just check in. We check in on a Wednesday and a Sunday in the videos to say like, hey, this is kind of like the context of the environment right now. Things are overall bullish. That's going to give you added edge to upside, or they're a little bit more neutral. Hey, be cautious. But as traders intraday, this rules the world. Right.
Okay. Yeah.
Yeah.